Good evening, everyone viewing. Thank you for joining our live. It's been a little while, but in today's live, we have three special guests, and hopefully today we'll have a very fruitful discussion and discuss about current trends in the market and our opinions on various topics. And today we have Grant.
Hello.
He's a fellow YouTuber and research analyst. We have Mr. O'Neill Edwards, fellow YouTuber also, aka Blue Collar. And we have Ruan Francis. Ruan Francis is a young entrepreneur and he's an analyst also. So you guys want to introduce yourself? I'll say hi to the viewers. I mean,
Hi, viewers.
Yeah.
Well, as for me, Lance, I don't introduce my thing already in a blue collar finance. You don't know.
All right. So, all right. So we're just going to begin the discussion right away. So, I want to ask each person. I asked Ruan already. I think Ruan was on our first live. So today I'm going to ask Mr. Grant, could you describe your investment style or philosophy?
Yeah, hear me?
Yeah, I'm hearing you good.
All right, cool. So my investment style or strategy primarily reside where it's like dividend based, but also look for value companies that have good prospect for growth.
Okay.
However, as Warren Buffett normally says, you always have to invest in a circle of competence. So that just simply means what you know are the things that you know more about. A person I know that as humans we eat, I live poor more, transport poor more people hostage. So you know a toll road right there. So also there's a lot of, even banks. You basically walk or talk or any transaction they have to do. Even if you go to ATM or so, they use banks. So I normally invest around those areas, but at first I like to see what is or how does the company affect me personally. So I know, as I say, I mentioned that I work at different institutions, but banking institutions per se, I use JMMB, I use them to buy IPO, use them to draw money. Some banks get paid. So if there are companies like that that already take your money basically with fees, and so why not try invest in that and get back a part of that? As well, I can leave more. Well, there's only one other way, which is the Mandela Road. Outside of that is the trans, which basically you have to take the toll and it's a transaction you have to pay. So if you can get a part of that money back to yourself while investing in a good sell company, then that's one way as well. Also the financials, primarily focusing on PE and PB, which as I say is relative valuation, so you have to have it against something else. However, if you're still using it, especially a company with low PE, the smaller it is, the better it is for you, the most part. So I normally invest around things that I know and a little finance to it.
Good, that's a good description. I mean, it seems like to me like you're more go for the value. You're a value investor. But I mean, maybe have a little twist to it. What about you, Mr. Blue Collar?
Last to me, my investment strategy, very simple. As a grant said, first, you have to invest in something where you know. All right, but not only that, in terms of knowing, you have to understand how the business make money. All right, so grant invest in banks. All right, but a lot of people don't understand the operation of banks and how banks really make money. See, so for me, the first thing, I have to understand how the company make the money, and it's not just about the revenue. Our company call it revenue, but all the revenue falls to the bottom line, because at the end of the day, it's the bottom line that will fall into the investor's pocket. So you have a lot of companies that make a lot of turnover, a lot of revenue, but no money now really come in at the investor's pocket, all right, because of the slim margins that exist. All right, so you have companies that have a lot of slim margins. So with me, understanding the company, what the company does, and how the company really make money is the order of the day for me. And then as it relates to the portfolio now, what we realize is that when you're diversified, and a lot of people talk about having a diversified portfolio, but in a real life, if you want to get rich, you can't have a diversified portfolio. Based on my studies, I'm see them thinking under the finance book. When you diversify your portfolio, you're really maintaining your wealth. That's the reason for diversification of portfolio. Now, if you want to get rich, you have to like, whatever I call the word now, concentrate. Yeah, highly concentrate portfolio. So just take people who get rich. Most people who get rich are people who have one stocks or two stocks, have one company, or most of their investment in one company. You get me? And that's the road for get rich. So me want to get rich. What me I gonna do? I'm not gonna diversify around. So if you go on Blue Collar Finance channel, we actually reveal our portfolio holdings. And Blue Collar only have 2 stock in our portfolio.
2 stock?
2 stock. Highly concentrated, high risk. That's how we do it over here, sir. For real.
I mean, I see some business people, they will own one business and they put 95 to 100% in their business. So I agree with you on that point.
Exactly.
But for some of us, no, if I have 10 good companies, I will try to go for the 10, but I'm not gonna go overboard. So you believe, how many stock do you think you would want to own, Guard?
Well, when I just started to invest, oh my God, I usually have maybe about 25 companies. Like when I literally just started invest, nothing until I guess I remember it was one of the advisors were talking to me and I showed them a portfolio and she said, you just have 10 grand in each of them company or little. When you get dividend, the check where they must send you worth more than the dividend where they must give. I'm like, I took a re-valuation and everything. As of right now, I only have 7 companies and there's 7 companies in different industry. Although 2 of them is in finance and 2 is in food, but predominantly in different industries. So I have one company like Grace, which when we invest in Grace, practically invest in every industry because they have food, they have finance, they have a lot of other categories. So I personally have 7 right now, and probably for the next, 5 to 6 years, it might just be those 3. I don't think though, until they start to name the financial statements and stuff that share. They say that.
All right. Mr. Ruan Francis, how about you? What's your style? And just to a recap, and how many stocks do you want to share? How many stocks do you own right now? You're mute. You're mute. Could you check the mic? I'm not hearing you so well.
You're not hearing me? Can you hear me now?
Yeah, I'm hearing you good.
All right. So currently, I've mostly focused on one stock, and that's Berkshire Hathaway. That's concentrated about 55% of my portfolio, but I also have another 34% well diversified. So I own some commodities, I own some gold, and I have 3% in a tail hedge risk. That's clipping the convexity of the portfolio against the market. So normally, I understand what O'Neill is saying. When it comes to wealth, it comes to owning a few high quality businesses. But that's incumbent upon whether you can withstand the volatility. And if you understand look at Bill Gates, Cascade Investments, those guys are very diversified, owning a lot of bonds, a lot of very concentrated portfolio in companies like Canadian Pacific Railway. So it's all dependent on what is the achievement of the investor at the end, what you're looking for. So I have matured. I was like only once, but I have matured to the where I understand that I can develop strategic portfolio mix by owning a multitude of different facets of the economy and perform very well, like 20%, 21%. So it's all incumbent upon and invest on what they're really looking for. That's all I got to say. For me personally, if you invest yourself and your family and you're not putting the money in a trust funds, but you're doing a very high risk like holding company, etc. Try to do business good, you're good.
Yeah. Precisely. But you know, I like that point that you just made. I like that point. Currently, I own like about 14 stocks, and I think that's quite like right now. Because other day I was looking at my portfolio, and I want to trim 2 stocks off. So it might go down to 12, but I mean, I'm just gonna stay there for right now, because I have more than half of my portfolio is in the US market. I find more value right now in the US market at this point in time. So I guess all of us have a bit different. We have a slight different strategy. And in the future, I want to reach a point where most of a lot of my wealth is stacked up in 1 or 2 stocks. Where you see the name, as God said, in the financial statements.
Lance, let me say something to you.
Yeah.
When you concentrate the portfolio like ARC investments are what Catholic was doing, and the valuation is very much off. You can sink like the Titanic.
Not hear your mic so well.
You hear me now?
Yeah, yes.
I'm saying to you that when you concentrate your portfolio like Catholic and you're not very much value.
Mike.
You hear me now?
Yeah, I'm hearing you.
All right. So when you concentrate a portfolio like Cathy Wood, right?
Yeah.
And high businesses that are very overvalued. You can sink like the Titanic.
Yeah, that's true.
So it's all incumbent upon valuation. If you're owning a business like how Warren Buffett does it, and you can spin off the cash flow, it's really you're compounding your wealth by owning other businesses using the cash flow. So it's very different. It's a very different ball game when you own the business and you can pull the money out and invest it into something else, like what Warren Buffett has done.
I agree with you on that point. But before I go on here, you know that Warren Buffett current portfolio, he has about 43 stocks, about around somewhere in the 40s. So I know, but I know Warren Buffett said in his meeting that at this point in time, you don't expect Berkshire Hathaway to grow as it used to in the past. So I understand that, but at this point in time, I think I can find 12 stocks that is undervalued overall in between Jamaica market and the US market. So I think I'm gonna work with that for now until the future where I might change that bit. Oni, what you were saying, Oni?
All right. So as I know, investment is about it's about putting the money where you get the best return.
Yeah.
True? That's the idea.
Yeah.
And everybody will talk, sir. People have different goals, different opinions. But I don't really buy into the argument because at the end of the day, we all want to make money.
Yeah.
And the most money there is to be made, and that we really want to.
Yeah.
So my question to you now, you have 12 stocks in your portfolio.
Yeah.
Some are perform better than some. Some are give a better return than others.
Yeah, I agree with that.
So why it is that you hold the one that will not give a good return?
No, that's as I said before.
Why not just let go those and hold the one that will give the best return and increase the return?
No, I agree with you. You know what? And I'm going to trim 2 stocks at the moment, but I am looking now in the market and I see some new stocks, about 2-3 new stocks that I might want to invest in. So it kind of have me away where I don't have to sit down now and see the best options to see the best stuff. I just have to look now to find the best choices. But sometimes it's a hard choice. That thing called paradox of choice.
So you're
So
going to the psychology of finance now.
yeah.
And that is what we need to take out of the game. We need to be as objective as possible. You
Yeah.
buy the stock and you love the company, but you not perform well. We let it go and move on to something better.
Yeah,
At the end
yeah.
of the day, it's about researching the company and understand the company inside out and getting familiar with the company. You get me? And
Yeah.
in that way, now you're not for all a bag of them.
Yeah,
But
yeah.
if it is that you don't really understand each company, you might want to diversify so as to lessen the risk.
Yeah.
So diversification, as a Warren Buffett would have said, is an insurance against ignorance. You understand?
No, yeah, I read that.
understand, you need to own a lot. But if you can dig in and understand the company, because a lot of time, we overblow the risk. A lot of time we say the thing risky, and it is not as risky as we perceive it. So if you understand the risk and really understand, and you know what I mean?
Yeah, I understand. I agree with you, but here's the thing, it depends on each investor. 'Cause I was listening to Peter Flinch, and he was saying that if you find 2 companies or 1 company, he would invest in that 1 company. But if you find 10 companies, he would also do the same. So it's just up to your choice. I'm not gonna pass 15 for sure. Because
So let me, before you go any further, O'Neill, and Lance, Warren Buffett did, when he find good companies, he always say he goes to own the entire business because he analyzes the business which is buying the entire company, right?
Yeah, true.
So I understand what O'Neill is saying, but you have persons who are holding on to companies that are very overvalued.
True.
That's one. Many persons are holding on to companies that are not performing right now because Mr. Market hasn't really understood the value as yet. And for value investors, you're going against the herd. That's 2. 3, I would say, if you have $1 billion right now, it all incubates upon how you want to perform the portfolio. Why Bill Gates didn't hold everything in Microsoft and he will understand Microsoft. It's all dependent upon, one, the type of what you're gonna do with the money. If you need to pull out 10% per year out of the portfolio, you cannot own everything into 2 companies. You have to have a little bonds, you have to go into real estate, etc. You understand what I'm saying?
yeah.
So yeah.
I understand your point, but you missed my point,
Yeah, man, I know what I say, man. I know exactly what I say.
Just 1 minute. I'm gonna make it clear.
Mm.
What I really say is that if you're poor and not have the money, you don't need to diversify. And the only way your money can grow. You see, if you're rich like Bill Gates, you need to diversify because that's maintaining your money. That's what diversification does. It keeps you rich.
Preserve wealth.
Exactly. You see, you know the right term.
No, I know what I say.
But why would you diversify if you don't have the wealth? What are you preserving? You're preserving poverty. You're preserving poorness. I get that, sir?
Yeah.
I just that.
So that means you're saying that, well, I consider over 20 stocks to be diversified. I think 12 stocks is still
diversified.
over 20 stocks, I think.
Personally, I have so I have 14, 15, 16 stocks. And then a way that like some of them normally drop, some of them normally go up. So this actually just create an Excel sheet that basically it automatically updates. And then like whenever our stock is like down 10, 15%, as long as we believe in the company or so, buy into it. But then now we narrow it down to 7 stocks. So I guess it's much more efficient for the most part. So it's just that the only predicament is that say the company down 20% or 30%, then you buy the dip. Problem if the dip. So they have to buy in more and continue. Yeah. So that's just the only predicament. But as I say, if the value is good and everybody just not see it as yet, then they can dollar cost average. That's what they call it, dollar cost average. But my dollar cost average strategy is buying it lower and lower as it goes. I don't normally buy it when it up or so.
Yeah, but like the point there, Grant, you know what you call the dollar cost averaging there? Semi-dollar cost averaging. Semi-dollar cost. And my term still, you will never hear it. So what you really have to say is that your dollar cost on the downside You know, dollar cost on the upside, it don't make no sense either to me. When I hear people talk about dollar cost averaging and buying the stock when it's high, me I say, what that for? You own the dollar cost on the downside, so you just need half of the dollar cost averaging. It's a good point. It's a good thing to think about it.
I don't know. I don't really do the dollar cost averaging thing, you know. I don't follow. It's a good strategy if I want to build discipline, I think. But I don't really follow it up at all. I just invest when I have money. When I have money, I say I want to put some in the market. I look for some stocks. If I can't find one, I hold it. That's how I do it.
And the same way like what you do, you know, all right. The only thing is that I kind of have a structure I work with, but only invest when I have the money. So whenever I'm gonna get paid or whatever, for the month, as the Excel sheet I update. So say my eye was spot on Grace Kennedy, but then by the time the money reached my hand for buy it, Grace Kennedy gone up 10-15%, but may have JMMB down 15%. But just jump ship from Grace Kennedy and just buying a JMMB because I don't know, I'm still believing in a company there. And then whenever now I see GK down, which it is right now, then we just buying. And then sometimes it don't. There are times when literally my whole portfolio in a green because of how consistent we do it. And then I have to turn to what is the lowest green. So like say everything up 10-15%, and then like any company that is like up 5% or so, I have the cash rather than spend it, just buying some more. Or I'm kind of focus on the dividend stocks because you have a few websites where you can know when dividend are paid out. I think you have the JSA app, and you also have Simple Wall Street where literally notify you whenever an upcoming stock come up based on history. And then if it's dividend you work with, you can just buy another company there too. So yeah, guys, I think the 24 for carriers, you know, the 24 you have to be a shareholder to get that dividend. And I knew that information from maybe like from the 10 or the 15. So kind of help.
Yeah. It definitely. So Ruan, over the years, how would you compare the US market versus the Jamaican market?
You know, the Jamaican market, to be frank with you, it has performed better than the US market in the merit show. The problem is I don't understand it. I don't understand. You have gas station 7x40x. You know, I don't understand the valuation. That's my problem. So I don't still, if I don't understand, I just don't understand it. Understand what I say?
Yeah, I understand.
I have friends who have enough money to the market and all that. And they catch stocks here and there, but we don't understand it that much. And the transparency, there's many conflict of interest and anything they saw. So
nuances.
So
Yeah.
Roy, what I say, mostly America you invest
yeah, mostly overseas me do.
because you can't understand the Jamaican market.
As me I say, me not understand the valuation for more. But I invest in stocks in Jamaica. Don't get me wrong.
Yeah,
But most of them when I invest for other people for them account. I have long term holding. We hold them for like the last 5 years.
True.
Now that's what I say. Most of the new stocks that are coming on the markets and most of the new hyped up investments. Some of them I don't understand them. I don't understand the valuation behind them. You understand what I'm saying? And even the underwriting process.
Yeah.
You have underwriters are pumping stocks on the market to investors. And so there's many conflict of interest.
True.
Yeah.
True.
So,
conflict of interest for real.
So I just want to leave it right here. I don't want to I don't know if I'm working at Jamaica soon.
So only me ask that question. Why every IPO come out at $1? Like me just find it kind of
Psychological thing.
strange. Like because
Man, you must find that strange because them can price it at anywhere they want to price it. If they want to pay $100, them can do that.
no, but I don't believe that every stock should be priced at $1. But as I say, that maybe a psychological thing because I believe some of these stocks they're overvalued. $1. If you look
They are priced for speculation. That's it.
No, hold up, 1 minute. You're not
No.
about it. Well, 1 minute. Think about value in the company, overall company. That's the first way you have to think about the stock. The value, so even though it's valued at $1, move away from the $1 and think about what's the total value of the company. You get me? Because at the end of the day, them can make the price, the IPO price, be anything they want it be. Them, if they want it be $100, them can do it. If they want it be 50 cents, them can do it. I mean, it was the wind farm. When the wind farm came out, a 50 cents it come out, no?
Yeah, 50 cents. I think so.
Yeah, because I didn't make it come out at 50 cents. Them could have make it come out at $1 if they want.
Why did they make it come out at 50 cents?
It's a psychological thing, man.
No, you know what? The thing about value, you know.
No, ignore all that premise. Ignore all that premise.
You know, it have an overall value, true?
Yeah.
So make us say the overall value is $10.
Mm-hmm.
So the value of the company is $10. Watch you now. If you want the stock to be $1, what you need to do is just increase the number of shares, the outstanding shares, 10 to 10. And then you get 10 divided by 10, give you $1. If it is that you want it, it'll be 50 cents. You increase the outstanding shares to 20. So 10 divided by 20 give you 50 cents. So it's the outstanding shares. And that can be anything. Them can manipulate that, them can push it first, them can take it down, them do anything they want with it. So at the end of the day, Lance, why you focus not on the $1, but on the overall value of the company. That will tell you if it's undervalued or overvalued. Because a lot of them, you know, the dollar, when time dollar come out and we value the dollar over blue collar finance, we've got value dollar $2.60. And we put up the valuation for our side. A $1 it sell for. That is undervalued. Even though a $1.
And value is relative because it's all group assumptions.
Yeah,
But when me
assumptions, yeah.
Yes.
You look for the assumptions and know whether or not the assumptions are reasonable or they are excessive.
When me ask it to you, O'Neill, now,
Yeah.
if you put in a stock on the market for glean attention from the general public who are interested in the stock market during a speculation period, you put the price point as low as possible for every man to access the market. Can you what you do? Yeah, try accumulate capital from the market. That's
Nothing wrong with that.
Hold on. Yes,
True.
that's the fundamental premise. With Wington, has Wington been a feasible investment for the Jamaican public? I was unloading a debt to the public. That's the rational question we need to ask.
No. Before you even move on whether or not the thing is fundamentally priced, you know. What me simply I just say is how them come up with the $1. Which means them could make it anything they want.
Yeah, but if they can make anything they want, I don't believe that. I believe that it's just a psychological thing and it's not really going off a pure value alone. That's what I think. Not saying I wouldn't participate in these IPO, I haven't, but I'm just saying that it's more of a psychological thing.
Yeah,
because
Yeah,
if you look at it,
it's like you see work already, so why you go fix it? You see 2-3 company come out at $1 and then pop off. Why not do the same thing? Why you try to
When I try to get to them, I want to move away from the one. All right, it's a psychological thing. And which company come out at $1? Everybody just start follow. Which one was it?
A Spurge.
Spurge.
One before Spurge.
Spurge, no. Edifocal.
No, before Edifocal.
Came out at $1 too.
That not really relevant still now. We get where you are still.
Yeah, but when I say I want to move up and pass from the $1 now and start think if the $1, if the company came out at $1, is it overvalued? Is it undervalued?
The Jamaican populace doesn't listen to me. The Jamaican populace, the general populace don't have the knowledge to actually value a stock. And the problem is this: they see $1 be I don't buy it for $1.
Yeah,
And that's
this
is the point. Listen to me. This is the reason why I say there's many conflict of interest in the underwriting process. Because when you put a certain stock on a market, we're very hard for even for value. And I put a 50 cent, $1. People generally not look on it, and you can get a lot of raising the capital. So
yeah, you're right. You're right. But I say, as we here now, as people understand the thing, why we are focused on the $1. Each time them come out at $1, me look on the overall company and I say, all right, one selfie, them come out at $1.8 billion, you know, the overall, you know. You know that? The overall value of the company.
Yeah, I remember.
And when you look at Edifocal self for what now? $1.5 billion.
Yeah.
Even though Edifocal had that massive run up, Edifocal came out at $1 increase. How much percent?
100.
180%.
Maybe $3 now, Edifocal.
Exactly, thereabout. But what may I say? Even after that run up, one-on-one, I sell at a higher price than Edifocal, even after Edifocal run up so much, So that's simple. Me not even think about the $1. One-on-one to me is fair value.
Well,
You get me?
if you look at it that way, I mean, you can see that. But the next thing is the basis of allotment with these stocks. Because, I mean, to be honest with you, like, you do these basis allotment and person can get $10,000 worth of stock. I think it's a thing to do with demand and supply.
Yeah, man.
Because you know that will drive up the price. Because if you can't get the stock, then you have scarcity. Everybody want to grab the stock. Naturally, it's just like you can just bet say it's stock will reach $4. You're not even have to do nothing. You can just
The thing is, the company them also don't even really give much of them company. Because when you check most of them, I don't they getting 15 or 20% of the company. And then even at that, when them offer it, you still have reserve pool, maybe I take up 60 or 70% of what them offer to the general public.
True.
Personally, the only there are a few benefits when it comes to listing, especially on the junior market. That's why you haven't been seeing much main market stocks, because there are more regulations, there are more prerequisites, and the benefits are not as vivid as the junior market. Junior market, just imagine you get 10% or 20% to a company, and then you don't pay tax for the next 5 years, and then the following 5 years you only have to pay half of that. By the time you're good, you're gone to wherever you want to go, have a bag of money and something there. So there are other benefits there. So plus you get practically free publicity, which at the end of the day, I will start equal more revenue to you.
yeah.
And personally,
Continue.
me buy art. So my share is not simple. But I normally just buy Crown Water, D&G, them things there. But because I know say, all right, Crown Water is what we think to do. And if you soda, so I go buy a bigger instead of a D&G, because one, I know say, all right, we think to on the market. If me buy my one little Angela, come to $1 billion. So it kind of help the company multiple ways. I just saw me look at it, and I just think that's why them not really give up much. So them not lose much control, but at the same time, them get all our good
benefits.
I agree with you. It's a good thing for the companies. It's a good thing to list, because you get it's a marketing ploy, I think it is. And I mean, they get the tax benefit, so that's a next plus also. With regarding what you saying, you buy companies based off how you use them. I don't really do that, but I think that it's something that beginner investors and other persons can do if they like that strategy. Because when I used to do that, I realized it wasn't the most profitable way of investing for me. Because, for example, I go in a supermarket and I look at, for example, say we're looking at Grace versus Alaska. I don't see where it make a difference to me if me buy Alaska or Grace. I buy based off of the volume me I get. And how much I see the price can appreciate in value. But everyone to each their own, I guess.
I said when I just started investing, I said before I start going at numbers and things there, that's how we usually invest, because really I kind of me a own person now from this space where I actually even start investing in things there. So it was more of a trial and error for me.
No.
I'm trying to figure out, all right, this kind of makes sense, all right. Yeah, I always just see them. I prefer the taste of Grace over Alaska. So I'm like, all right, I'm going to choose that instead, So that's how I did look at it back then. But no, you can go in and financial, understand.
Yeah. No, you're smart. Yeah, you're a smart investor.
Smarter.
But I agree with you. It's a good way for investors to join, even your kids. Like, it's a way to get your kids to join, to begin investing. Like, you see, they like Disney, or you see, they like a certain product, Sopogen. You make them buy the products and make them create a portfolio based off of the products they use. So it's a good way to start investing. So don't get what I'm saying. I mean, it's a good way. It's just that something that I think maybe after a while, person you can look at other ways also. So I think Ruan, you want to share something?
Yes, I'm sharing something. I don't tell you guys already. O'Neil, really, O'Neil, I just did this quick while I was speaking. Just for O'Neil, just to discuss my points. So, O'Neil, I have a friend that contacted me, a Jewish guy, a couple of months ago, right? He didn't want to invest in the one stock or five stock. He wanted to invest in a portfolio that is able to match Warren Buffett or even beat Warren Buffett. So, long ago when I was at UWI, you know, me, a man already lands where I love research and everything there. I love this investment thing. So I started thinking, how can you get the same return as a concentrated portfolio but with the least less risk? So what I'm saying, O'Neil, I was just like you. But this as a poor man, we're not gonna really think about them thing. But when you deal with institutional fund, I deal with them type of clients, somebody will ask you for them advisor, you have to structure a portfolio in a way where it incubate upon the economic climate and how you structure the portfolio because different portfolio streams get different returns. And you can still structure it to beat the market. So it's actually a simple structure of maybe develop while we are speak. Right now, so we have the Vanguard, broad index fund, technology focus. So we have the good old close stores, we have the good old Amazon, Apple, we have the good old, some good old company like this, IBM, somebody Bank of America too as well, some very well developed. You have the treasury bonds there, so. Who don't have and hold treasury bonds? You have it both the long term and the short term. You have a little money sprinkling like commodities, gold. This is how we develop still. There is a book with them calling him tail hedge risking. It's very complicated, but if you understand it, you're able to clip the portfolio, convexity, so you don't lose much return when the market collapse. So we're going to still when we do deliver the phone, I show you over from 2018 to 2022 how the fund would perform. Put $1 million. We put $1 million in Ruan Strategic Technology Fund and Berkshire Hathaway. The Strategic Technology Fund beat Berkshire Hathaway by 10%, compounding the $1 million to 2.1 million. And if you can see the risk to reward ratio, by it's an example me I show you. So over a 5-year period, 4-year period, they can compound your wealth by 20%. We're having this concentrated risk. And even more of this whole structure when we apply fundamental deep value investing to apply to the same structure, something that lose, but I have a better performance than the general market. So that's that me want to show and say, yo, this whole deep domain all in one stock, you know, work when you deal with certain business and certain investors. Because nobody can give $1 billion sovereign wealth fund for them type of picking. You understand what I'm saying, O'Neil?
Yeah, man, we understand everything what you say. Here what you say. When we are talking about being concentrated, we're not talking about doing it for a client. We are talking about personal portfolio. So with a client now, you have to do what you have to do.
And you can do this with the portfolio. You can do this with the personal portfolio.
Yeah,
because
now what I'm saying, you have more leverage in the personal portfolio to do whatever you want. So when I say highly concentrated, we're not talking about somebody in a blue white collar investors. You can't do that over there, so.
But I know
color me I talk about a blue color me think there. So anytime you hear me I talk, I straight blue color people me talk to.
Yeah, I get where I say.
The white color something, man. White color, I know the white color thing. You have to go down into the detail and I understand it too.
Yeah.
Understand it.
Yeah, but no,
I know that's my personal thing there.
Yeah, so what me asking to you know, O'Neil, even if it's a blue collar thing, more than deal with a strategic portfolio for somebody like this and have it automate, just run for around 20 years, I can promise you say it will beat any concentrated portfolio over. Like you must look if you pick a Amazon or Apple. Enough people are so lucky. So, like Warren Buffett say, low cost index. So for some white collar people, everybody me tell you if you want to pick stock. Because if people see you want to pick stock and them lose.
Check your mic, Ruan.
Yeah, you hear me?
All right, so
yeah, hear about the mic.
just a context, just a content, because a content lands and develop content. Now, I'm going to talk about your portfolio. Put it back up, man. I'm going to talk about it for a few.
Yeah. Yeah, man, but maybe feel like.
Talk about it. Where's the land?
Yeah. Well, go ahead. Sure.
Yeah,
So Yeah, I me feel like this take me years and sleepless nights to even understand this. What me I try to show on right there.
So,
And
all right, 2020, the market tank out. Where you
mm,
get?
2020, me only done one. We can show it. We can pull up about the data. But
Yeah, yeah.
me only done 9%, man.
You're down 9% throughout
9%.
2020. First
Yeah,
year down 21%.
yeah.
All right, nothing wrong.
No, but
No,
what me,
because this is a short term. This short term still enough. So even though you say you beat Berkshire over what 4-year period,
no, what me tell you is this. The practice is, hold on, we do this for a couple of years, like 10 years. We move and beat and me tell you this, the way how you structure the portfolio. As we tell you, you can do this with individual stock too. It can be 10 stocks.
yeah, man,
And,
not a problem. Because I say, is a 4-year. So you say you do it longer.
yeah, man, we do it for 50
If you do
years.
it up longer, you have been beating Berkshire from how long now?
This will be Berkshire. The structure, how we develop it, how you structure it, it will be Berkshire from way back in 2000. I tell you, 20 years
Nothing
straight.
wrong, nothing wrong.
So let me try to explain to you, the geometrical tree in the portfolio is completely converted to the team.
Yeah, here.
Yeah, Mike, I go
Yeah,
out.
so muffled.
Right.
Michael,
Hello?
Yo, it's so muffled now, way, man.
Yeah, it's all muffled. Yeah, muffled.
Maybe at the mic itself. Can you just plug it out the mic?
Hmm?
As in, just plug it out or something like that.
Yeah, man, that.
Yeah, the sound come back, you know. When you
Yeah.
talk just now.
All right, so now hear me properly, right?
Yeah,
you're
yeah.
hearing it good now.
Hear me, Lance? No, that's
You're
it.
hearing it good now.
So no, my problem is no. Nah.
Oh, him not here. No, we not here, no.
I'm not talk.
It's my talk, man, but like, you know, but
But at the end of the day, God, him have a portfolio you can jump in for it because the man never do it over the years.
he needs for can email Warren Buffett, make him just think of $1 billion. You know,
Yeah.
that vibe. See, because I'm not necessarily familiar with the US market to that. So maybe I much say into the companies them when
Now
invest.
hear me now?
Yeah.
Good man.
All right, so what me I say now? Yeah, this is the whole thing now. Sorry about that.
So on better.
What me I say to you now, O'Neill, you have people over the years where them can't pick stock. And you get what me I say? And then them want better return on the market, risk adjusted returns on the market. You get what me I say?
Yeah.
So this is where the youth them from Harvard and Stanford do. They might use machine learning to systemize this and I give you a better return. So me not complicate the thing, but I find it's very invaluable. The concentrated way I go about going doing it, like as I say, a poor man thing, but a poor man have to have knowledge too. Know for value stock, understand industries and business models, strategic advantages, understanding the future and discounting it back. It is very complex. I'm gonna recommend anybody if you even try to do that.
But concentrated.
The concentrated way. As Warren Buffett says, Warren Buffett said the same thing as well.
All right. Warren Buffett also say. Warren Buffett say diversification is a
Protection
insurance against ignorance. But that doesn't mean that diversification is wrong. It just means that if you're a less knowledgeable investor or a beginner, nothing is wrong with buying into index funds.
Yeah.
Or a portfolio like yours.
That me as a Lance, me not advocate for the whole concentration for everybody.
Yeah.
I don't understand. That me I get to.
So for new investors, nothing is wrong with going into index funds or using unit trust.
Exactly.
But as your skill develop as an investor, now you can try to be more
concentrated,
strategic, or more concentrated if you want.
Yeah,
so
man.
to each their own, and I think all of us have a very good point right here. Very
Yeah,
good.
man, I agree with O'Neal 100%. Everything O'Neal said, O'Neal in the same camp. So there is, I feel like when I offer him still, when I try to show is this, there's a better, you can go to research ways how to do this thing differently still. It's similar than concentrated way as well. That's
All right, let me show you a point. Because I understand everything you're saying. I have a friend who working on one of them. White collar. One of them finance.
yeah, street man. Yes, I know for the white collar thing.
Blue collar, the blue collar finance YouTube.
No.
White collar, him control a portfolio in one of them local financial institution. So one day him knock me up and say, yo, me beat the market, you know. Film portfolio has been beating the market for some time, about 3 years. Saying, so me I say, all right, you beat the market. Jamaica up, JSC up about 30%, him up about 31%, 35% thereabout. That's when JSC are going good. From 2015 I come up. I ask him a simple question. What make you beat the market? Him can't answer. And that's the thing with a lot of them. You diversify and you do a lot of things. But if you can't break out the diversification strategy, you might have beat the market and you will beat the market.
And the market, a beta them call it, and an alpha.
Exactly. No, you talk to me. I don't want to use the fancy terms because I know them. But
yeah.
I'm just talk it normal.
Yeah.
The stock picking option of the market, you know. Well, yeah, the return, like when this is what I can do. The entire return where the portfolio make, they can break it down into say market return. This is just for investing in the market and you don't do nothing. And you make this. Stock picking return. This is for you. I pick the stock them differently.
That's called alpha.
Was return different, you know. And you have they say rotation return where they rotate the different industry. You can break out that, you know.
Yeah, factor.
Exactly. I make 10% because I move from finance to manufacturing. I make 5% because I pick A stock different from B stock. Them not know these things.
Yeah, that's the problem, you know, with diversification. That's what I tried to explain to you a while ago. A lot of persons are diversifying, but they're not understanding what they have diversifying against and how diversification work. Because bonds operate different from equities. True. As me tell you, the portfolio I'm show you. They call it layering alpha into betas. You know what I talk? Yeah, so your structure for the market return and you layer the sweet point and like what you say, you know, you pick it that, you pick it that, and you have a very good structured return.
Yeah,
and this is
the thing and it's nice, you know. Like how you do it, you enjoy because you know exactly what it is that you're
exactly. Doing. So when we realize now O'Neal, we can use a bit of machine learning, and then when we do machine learning and jar off it up and find a good quality business, then we just dig them the financial for 5 years. And we lay that palm data. And I don't have a problem with that. I don't have a problem with that, man. Yeah, and this is how you can scale to $30 billion. That's example, mention. Yeah. So I get what you are saying. Yeah, so yeah.
But it's a lot of complication.
Yeah.
And the mad on the street, the normal person, them not have a clothes. So you know
and I mean? it really and it also hard for them even go to go pick stock to enough people have come and say, yo, buy this or buy that, buy this or buy that.
Yo, so people on the local market, me people are say stock easy or whatever. Yo, it ain't easy.
Because them not get the downside for the most part, so them not get the hit yet, but no say, oh,
it easy, man. And the thing is, you know, as I say, a man might, all right, say you invest in the IPO come out, you invest. IPO go up to 300%. You triple your money. You know, I say you make it, I know you make it.
Man,
you get me? So, them don't know when them make the money as against just the market make it because you're in the market.
Yeah.
So that's why them say it's easy. I know not easy around your daddy.
You see how
scratch the surface right yet.
You see how Grant invest, as so the normal investors will invest. You see, if you work in a party shop and you work at Grace Kennedy, and you understand the seasonality, you understand the financial statement, you know, read a balance sheet, and you don't see too much debt, and you know, you see the revenue grow, you just buy a stock. So you're in the business, you understand, you know it.
I see it in front of you.
Which in front of you. That is itself.
I saw retail investors will invest.
You know, funny, you
Yeah,
know,
I agree with that too. I agree if they understand the business, they do that. But if they don't understand the business, I don't agree because you know you have two risks now. You have the career risk and the investment risk also. So if the party shop should crash, you probably will crash. I don't know if you disagree with me or
Yeah,
agree
man,
with
what
me.
I say right now, Lance, but here, wise, when they do the party shop, they know if it now perform good enough.
Exactly.
So
No,
you
when
get
my-
me answer, Lance. So when them fire a man today, because not now go on, you see it and you know you say, yo, business is so hot, you know. When the crowd come and buy the party, you know, you see it in front of your eyes.
You did
Yeah,
it.
yeah, yeah.
You're there.
funny enough,
It
funny
can't,
enough.
yeah, research.
But at the same time,
being there.
if the party now sell good and you see where you have some problems in with management, you can also not buy the stock.
Yeah, you're not gonna buy it.
It's
Yeah.
it's a two-way street.
Yeah, you're not gonna buy it,
Right,
Lance. What we are trying to say is a part of research, you know.
Yeah.
It's a part of research where you're working on the business. You go on the highway, you buy Trans Jamaica. You see
Yeah.
me? You got a barber shop around, it's a T-bone, the barber shop, when you on the stock market. You know, T-bone cut here good. You know, them always full up. You
Yeah,
buy the
yeah,
stock.
yeah.
And you just want to read the balance sheet. You don't have to know discounted cash flow or nothing. Read the balance sheet, the debt with them have and see how the revenue will grow. That's all.
Yeah,
You
man,
know,
it's,
when,
it's a big part of research, but we think we neglect
Yeah.
real life.
when them have
Free
the,
talents.
the Spur 3 IPO when they dropped the other day, somebody will work, them not work there, but they work, all right, so they work where Spur 3 buys their peppers. And you know, how they make them sauce and everything, for buying them pepper and them garlic and them this and that from a specific place, and then now them ship it up and do whatever the manufacturing. A guy say like someone I know him say oh him put in like all a million night just cause him know the business. He must say oh if a regular stock him now invest on IPO, but because him know say oh
Yeah,
all
yeah.
right. Work as Spurtree. Work where me I want a Spurtree suppliers them. And then them here talks of yo, them want to go expand for facilitate them demand and them stuff there. You know, say more money that I come for them company and more money in turn I go to Spurtree.
Yeah, yeah. I
That's
agree
how
with
I
that.
look at it. Because before even when me just start invest, I always just look around and I say, yo, who won this? Or who won that? Like not knowing, not knowing, say, oh, like stock market and everything. I just I wonder who won this. Like go over the plaza and I say, oh, parents and parent and them something there. But then y'all go workplace like all you go halfway train, you see this big 58 building, and you work a call center and you go Alarica and you say, who won a building here? I wonder if them a parent. And then you go so bam, yeah, I mean say oh a Stanley Motor own that complex there and them a parent to Alarica. Who won this? Who won that? So
Yeah,
that's how I looked at it growing up. I still use it, but because now I have a bit more knowledge on certain stuff,
All right.
it take an extra layer of step. But yeah, and then I think when I remember when I talked earlier about a stock value at $1, one is not just psychology alone, it also offers more liquidity in the market because I'm sure we know about Palisades, but for them stock is like $1,500 per share. Them don't really get much trading volume. Matter of fact, the company name Fastwitch. Fastwitch the other day did a stock split. And since them stock split, them more volume start trading. So like yeah, look up to the stock split, like maybe 200,000 or 300,000. And then after the stock split, I did a 110. After the stock split, now them start some millions of volume and them something here. So more persons tend to say, oh, say oh, it's cheaper, so I buy, which in term is not necessarily cheaper, it's just priced at a lower price.
Yeah, yeah. All right. We're gonna take a few questions. So I see here where first question is from, let me see, Stefan Flowers. She said, I hear people call Jamaican market a pre-market. What does this mean?
Pre-market.
It's a pre-market?
Yes.
I understand. Yeah.
You guys understand what the I don't understand. Could she elaborate? Stefan, could you elaborate a bit?
Yeah, but hear the term still. But I think the term just means the market is not developed. The market is not well developed before,
Oh.
you know what I mean? Maturity.
Yeah, yes. Maybe that's what she's going at.
I really, that's something it come from. But I never hear the term.
Yeah.
Pre-market, I when a market, when there's some trading before the market's really open or something like that, it didn't have nothing to do with
You don't have
development
nothing.
or structure.
Oh yeah, you have train after market. Oh, you're talking
Before market, pre-market
Okay.
movements and anything that's
Oh,
so.
okay.
You know, nothing to do with the structural and the market. So I don't understand what she asks.
Unless she means that, all right, so you have JMB with them have them own platform where they work on. So you can like look at the stocks and order buy stocks at that time and name something there. You have JTrader that essentially is the same thing, but I think you maybe participate closer to the market, which is like 9:30. But most persons would probably already put in them trade because me now go dead here in a day. My work for go. So I'm just go put in the information, time one by Grace Kennedy at $100 and then done. Unless that's what she means by pre-market, meaning that all I trade them already have already, and I just JC we just facilitate the trades of the stocks and I buy and I sell for the person.
All right. Well, I guess that's where she's coming from. So I'm gonna answer the next question. Chipmunk Financials. What are the three main criteria a normal investor can use to pick a good stock?
Go on, blue collar.
Well, you know, blue collar don't really broke down things in them structure there, you know, like, you know my style. At the end of the day,
Yes, repeat.
I say you have to know the stock. You have to know the company inside out.
So understand the business. That's one.
Understand the business.
Yeah.
And getting it at the right price because investment is a business, you know, business you do. So if it is you want to make some money, saying the stock is valued at $10, the stock worth $10, buying it at $10 don't mean nothing. You're not gonna make no money there, sir. So say I want to buy it at a discount and watch it rise, go up to the real price.
So you understand the value different from the price.
It's a total, you understand what I say?
Yeah.
So there is value and there is price. Price are something where you see every day. Value are the research and understanding the business and know say, yo, you get me?
So if you look for sorry, go on.
No, man, you can go on. I only said three still. I said you don't need not more than that. Understand the business and getting it at a cheaper price than it is really worth. You're good.
So the first thing you want to do is you want asset management. So your asset management, you want to look on return and invested capital. How has the return on invested capital over the last 5 years? Has it been beating the market? Treasury bond. So you assess against the treasury bond return. How much has the manager $1 laid in returning equity? How much market cap has that created in the last 5 years, last 2 years? It's for those assessing manager, and you want assess return on equity and return on assets. How them structure and manage them use efficiency of the company. For outside the company, you want the company's strategic advantage. So understand the company external forces now. So you look at strategic position of the place, what kind of business model they have, and the last and final and most important thing, the valuation we have to pay for the business. That's I just think that if you look at them simple things there, you can find really, really good stocks.
Right. So everybody have their own method of valuing a stock or such. The very first book that I read, matter of fact, I think I'm right here. So, yeah, the very first book I read was you probably not gonna see it, 7 Secrets to
Investment.
Yeah, 7 Secrets to Invest. Like Warren Buffett, basically. And the three top parts are the three main ideas among it, as I did say, is circular competence. Circular competence, then broken up into several ways, but to just give a short summary, I did a summary on it on my channel as well, so you can probably check that out, did it way back. But circular competence just means where you are and the things you understand in the things you are. Because, all right, I know finance, that's why I'm kind of the run the banking sector and them something there. But then suppose there's a fishing company. I don't know how to fish. I don't even know how to get on a boat while they're in the water. So there's no sense. So are you actually trying to invest in a company? Don't know, because that's how they get robbed. But then you can also learn. So that's one part of it. Economic moat is also a concept where what are the advantages the company that you're investing in has. So everybody knows JPS. JPS is literally probably just one of the only person that facilitate light in Jamaica. So if that is a company that you'd like to invest in, you don't really have much outside other options to invest other than JPS. Them have a barrier to entry, which is the contract with the government. Nobody can really come in, come set up pole and them something and start the light bill and them something there. Them have economy of scale, they're buying a large volume, so they get cheaper discount or so on.
All right, I want to break it down because to me, I have 10 steps that I look at for each company. But for that person, that's a 3. So I just want us to do a quick recap. Which 3 factors do you guys look at? Which 3 factors?
All right, so for me, 1, understanding the business.
Yeah.
2, understanding their advantage. And 3, the valuation.
So basically, I think that it could be broken down into that. Everybody agree right here?
Yeah, man.
Blue color.
Everything on them some makes sense.
Yeah, man. So, but I don't think 3, I really think 3 is very short because some companies are more complex than just 3. But if the 3 main things that you're going to look for, those would be the 3 things. If only 3 things you're looking out for. So, next question, I'm going to go to Stefan Flowers again. What are the factors that cause the stock price to fly? And can this be predicted?
Factors that cause stock price to fly.
All right, so
The main factor that drive stock price is earnings.
Stock price or in general?
Yeah, that's a thing, you know. Stock.
Because I've seen companies that literally been losing money and then 1 year they make money. Stock price.
All right.
Earnings.
Yeah, earning is 1.
Earnings is the underpinning of the stock market. A beat earnings share, and that's all. That's all the people in focus on. Because it's the algorithms. Well, speaking about Jamaica, well, earnings. And in overseas market, you have algorithms that flag earnings. So once it beat earnings, stock normally go up 2%, 3%.
Institutional buyers also. So our next thing with stocks, so it depend. I mean, institutional buyers can contribute. These are like the big players in the market. So some companies, they will say like an institution known as institutions own 60% of a whole company. So I guess that's another factor also. And then next factor.
Speculation.
Speculation, that's a next thing also.
Which me think is driving the Jamaican market.
Exactly. Or that the Jamaican market.
Lance, you have people like me and you who claim so we are YouTubers, you know.
Yeah.
People start follow YouTubers a lot, you know, because you have some people when them talk on the stock price move. Based on just the talking.
Yeah.
Information will go out in the market. So, and that is the reason why blue collar finance was formed in the first place. We are trying to bring some objectivity to the game.
Yeah.
So when we come up blue collar finance, we have value the stock, then we are showing your figures, we are showing your assumption. It's not just about talking. You get me?
Yeah. What I try to do is educate the persons, and that's what one of my objectives with this channel. And
all I gotta say is this. Like when I tell you this last year, I tell him, say, yo, watch out for the Australian market. Man, Lance, it's my post, the Australian real estate market over there. No, is it a sink now? I want him to telling people like Jamaica said, them should be happy that the underwriters, they are working alongside them for the fees, because if it wasn't for that, most people would have joined already with them stock and them valuation or what them are jumping at.
Okay. You think shorting gonna be a thing for the market? There was an announcement that there will be shorting for the market soon. What do you think that will be?
Yeah, we can't wait.
For those who are new or new invest, shorting is when you basically purchase the stock
It's going to fall.
you purchase the stock at a lower price. So I want to find the right word because I don't want to
I'm gonna try to explain it to you, Lance.
find the right word.
Lance. Yeah, you hear me?
Yeah, talk. Go ahead.
So you have a stock and you hold it for the long term. So you buy NCB.
You
So you have NCB and you hold it for the long term. Maybe you holding NCB for the long term means that you think NCB price will go up. Me, on the other hand, believes the NCB price will go drop because the company not good. So what me do now, Lance? Me I go short NCB.
Go ahead.
So me come to you for the long term. So you buy NCB. I get a feedback for the long term. Maybe you holding NCB long term means that you think NCB price will go up. Me, on the other hand, believes the NCB price will go drop.
In my feedback, Lance.
So what me do now, Lance? We have a short NCB.
Yeah.
So me come to you.
Lance, you play the live stream.
Realize.
Yeah.
You're mute.
Yeah, man, blue color. Go on. Tell me how short selling come boss.
Yeah, so as I say, so what would I do now? For me, I said the stock I got drop off, you know. No.
Come borrow.
I got to Lance. I'm going to say, lend me a stock. Remember, Lance want only for the long term, you know. So him just lend me the stock. So me now have the NCB stock.
Tell me how short selling come boss. Yeah, man, blue color. Go on. Tell me how short selling come boss.
It's still a playback. No, for me, I said the stock.
Lance, mute the stream now.
All right, go on top, Luca.
Yes, I'm a borrow the stock. I borrow it from Lance. And what I do now, I just sell it in the market. You get me? So I could say NCB value $10 there. So I borrow a $10 stock from Lance. NCB share. I sell it for $10 in the market. And when it drop in the price now, I go back into the market and I buy it at the lower price. Let's say it drop to $5. Go back into the market and I buy it for $5. And I give back Lance. And I give back Lance him one share when I take from him.
And pocket the profit.
And pocket the profit, which is a $5 profit. But
And
the risk now is what them call short squeeze. So here what? When I take it from Lance, sin, I'm going to sell it for $10.
I'm see what I go on.
And you know, yeah, I start buying NCB stock and the stock start go up. Me now, if I go back into the market, go buy it for give back Lance some stock, you know. So if it go to $20, I have to go buy it at $20 now. Remember, at $10, I sell it for you. At $10, I have. So I have to go find an extra $10 to purchase it and give back Lance some stock. And that's the risk in it because NCB can go up to any amount, any levels in terms of numbers.
Because of madness.
And the more me lose.
Yeah, so you know, general short and stock are one of the riskiest thing because the market can remain, the market can remain very mad until you even sober. So it don't really make sense, my brother. Excuse.
GameStop stock. Let's see, it's why I put some hedge funds over them on.
Tesla, the same thing.
One yeah. This boy to Bill Hackman. You see them.
Yeah.
Yeah. So my problem now, you know, the Jamaica market is very illiquid another day. I don't know how it's going to work out here. You know? I don't even know if it can work.
Alexa, I can put $1 million on say me a short in CB and I can come and say yo, I put some put option.
I get $1 million at any time.
Alright, I can come back up my hedge with some options then. I can't do that. I don't know counter for hedge. So
yeah, you understand? So I don't know.
It don't make sense to me right now. You know, develop for that.
Or no, I think because Jamaica is not so advanced as it would barely just start doing a stock market. So introducing short primarily probably just going to be focused for like institutional investors. And then at that point, them research diligently for actually get the information. Say, all right, we don't believe say this stock going be at this price for too long, we can short it. But it's an idea, but idea I think they probably just overestimate what the Jamaican market is capable of as a right now.
I'm not underestimated either.
Yeah, they know that market been going up for a IPO, push up the price, make the movements them seem like we're making a lot of progress. But I really just supply and demand really a push for market right now, even though we literally in the midst of a possible recession. So yeah, I think shorting right now I go work. I think JC might just put it up as a banner, but then when they implement it or try it not really make much sense.
God, I'm say this to you. But the Jamaica Stock Exchange course from about 2014, you know. And that was it was a discussion we had in the class because it has always been something what they want to do, and not just now, you know. You get me? But one of the things is the risk that comes with it. That was one of the things where them now really want to implement it because them say it's really risky. And then when we talk about the liquidity of the market, the liquidity now they have to facilitate it. So them hold it off for a long time. Them hold it off. So I don't know if them believe say, 100 stocks are traded for the stock exchange now, and a lot people are more aware of the stock market. Remember, Wicton come out and them talk about the amount of people who start investing in the stock market due to Wicton. And as these new IPO come, you have more new investors coming into the market. So I don't know if at that they must say, maybe, you know what I mean?
I think like you see when you have short selling and you don't have a proper liquidity and microstructure, like liquidity providers, it can cause a whole heap of breakouts of flies. You see what I say? So a man like me want to short all the Jamaican bonds them. So I want them going to bonds too.
I wonder why you don't want to short them.
So that's a pretty good explanation. The shorting. I was having some technical issues, so I really could. But that's a pretty good explanation, and I'm going to do a video on it sometime in the near future. But I'm going to take on a next question. Personal asking. Chipmunk Financials. How do you rate dividend investment opposed to growth investment? So for me, it's not really a straight line like that. For most dividend companies, they tend to be more mature companies that are, they reach a certain point in the business where they can start to pay out more cash. But most times they don't grow as fast. But that's not for every company. Because you have some companies that are paying dividend and they're going at a fast rate. So when I did my video last year on the dividend stocks, Barita was one of the companies that was on my list. But Barita was also one of the fastest growing companies. But this Barita was an exception. So in general, growth companies tend to don't pay dividends. So if we're going to look at the US market, I'm going to look at companies like Meta, Google, Amazon, those companies tend to don't pay a dividend because they're reinvesting back the capital back into the business. But if you look at a Coca-Cola now, or a Procter, or another blue chip company, they tend to pay dividend because they reach at a mature stage. So if you want to get dividend companies, you have to look more for mature companies. So what do you guys, all you guys agree, or you have a point you can add on this?
All right, remember some my piece. Dividend investment, I really believe in that still. Number one. When I look at the local market, seeing local market split into two markets, you have the junior market, the main market. Well, if the main market companies are mature companies, pay a dividend, I don't have a problem with that. But with a junior market company paying dividend, I think that's a problem. I think them just a waste money. See, I'm going to explain why I said that. That's why I said company that needs to grow need to harness their resources and grow the business. One of the problem is when you pay the dividends, seeing dividends coming to us as shareholders, government take a slice of the cake, you know. I think the government takes some 15% of dividends.
Yeah, they take.
Seeing, and one of the things why most companies invest on the Jamaica, on the junior market, that is,
They want to grow.
is to avoid the taxes.
yeah. Well,
So why now you invest to avoid taxes and turn around?
I give
You
the
get me?
government.
A subject us to taxes again. So what would I say? And it's a very easy way, you know. Keep the money, grow the business, make the capital, give us capital gain then. So when the stock price go up, who want to take dividends, sell whatever portion that is equal to the dividends where you want and take out your money. And in that way, you're not paying no tax again too, because capital gain is not taxed on the local market. So pay us in terms of capital gain. Who want to take dividends, take dividends. I mean, take the capital gain without having to be subjected to the taxes. And everybody good.
Let me say something too.
I-
Let me answer now.
all right, answer Ron. Answer first.
I have some man on the stock market where when you see them offer dividend on the junior market, you have to be very skeptical because dividend stock in Jamaica is a very direct correlation between dividend and stock price rise. When you hear stock give a dividend, stock price rise. I have some manager, some senior manager who run the company, most of the share with them having at the company in a offshore holding company. So that capital gains are for them benefit. So is it, as what O'Neill said, is it actually beneficial to return the capital to investors or compounded like how Amazon has compounded well within earnings? And you have to answer that question for yourself. It's subjective. But a whole heap of game I play another game. Yeah.
Whole heap of game. All right, Lance, being as me up on your channel, I'm drop a bomb for you. Saying mail pack. Me I look on mail pack. From about 2018, 2019, I come up. Me I watch, analyze them balance sheet and me I look on it. If you look on mail pack balance sheet, them have what them call related party investors. You ever see balance sheet with related parties on it?
I think which company have it again, sir?
Most of all of them have related parties, man. You have to be careful. Related parties. When it's a related parties on a balance sheet, be skeptical because them can take where shareholders value and sink it off over related party. So related party meaning somebody in the company own the company where them are do business with. See?
Yeah.
All right, so Mailpack has related party on the balance sheet. Now, when you look at the notes, it has Express Fitness, you know, are one of the related party. You know, so Mailpack management own Express Fitness. And them have a water truck company, I think I know the dam rep, I think. You know, so Mailpack actually lend money to those two companies at no interest rate.
Exactly.
And at no time to repay the debt.
But that would have been disclosed in the statements and financial statements if they invest.
It is in it. But if you not read it, you can't see it.
They're not gonna know. The average investor now know that. That's
So
something
watch it. So when me look at it, watch me now. Me look at it and I say, yo, I want to go on there, so it's like them one, and that is the reason why if I go on my channel and listen to my review on Mailpack was selling at $3 something. And I say, yo, my value it way down at $2 something. It there right there when me the value it now. So me I watch it, see? But what me I say, it's almost like them want money to fund them other business.
Yeah.
They are more interested in the other business because more growth over there. So they must try to pull the money out. And what we realize now, very early, you see them pay a big dividends. Since I when we check the dividends and the amount that the manager would get is the same amount that hear them invest in the express catering early after the dividend payment. So money he want to put over there. But remember, you know, if Mailpack wasn't a public company, you know, him could have just moved the money as him feel, please.
O'Neill, do some investigation on Dollar Financial now too. And you will see what I'm about. I saw them operate.
What go on about?
No, I can't say, but if you understand how the architecture of how Jamaican, these CEOs and managers are operating, I just say related parties. Normally, disclosure not come under the AS 18 and the financial statement, right? But the problem is the average man don't know. And the average man don't know, say, a holding company, the manager used to own the equity. And when there's certain dividend payout, you have to question, is it neutral, is it about a business or about a benefit managers?
Yeah, man.
So yeah, as me I say, you have to know when you invest in Jamaica market, because
you have a company, probably top dividend paying company right now, which is Carriers. Carriers, like I don't see, they make a lot of money. I will not go around that. They make a lot of money, but at the same time, them still pay out a lot of dividend, and the stock price not really move to that significantly. I guess maybe over the past 2 years, it maybe be like 33% or 30%. But like when them unknown, it's like something so constant now. It's like it don't even make any move in the stock prices. But although I am all dividend, I think them probably could have just invest the money in somewhere else. See them have cannabis company coming out and them somewhere. Them have them AMG September 9. I'll go and probably just have to ask them, what go on, why I'm just like give you the money so when they can invest in different companies and grow. So I don't remember seeing related parties on their stuff. But I guess because you have nothing to do with the money and you just make it like you reach a level, you just decide, I just continue to pay to keep the interest because them not miss a payment.
Carriers are cash cow. From ever since Carriers have paid big dividends. I don't think I'm going to stop anytime soon. But why you see the stock price now responsible? Carriers have fundamental problems around here. Remember the illegal cigarettes, something is a big business. And it acquires them throat. You get me?
I think that's for go and never just them have the money evidently. Why not invest in it? Although we have a lot of
you see thing about why I think some things we're not gonna be able to change as investors. So if you feel like Carriers not using your money right, like you sell the stock and look for a better option.
There are dividends investors in the land.
10%.
No, if you're a dividend investor, yes, but if you want to say growth, you have to look for a younger company and you look at the new products and services they are bringing to the market, the innovation, the strategies, all of those things. So
there is nothing wrong with before you cut it out. If a company that grow marginally, if you see a Warren Buffett structure and deal, and we go in and take preferred equity at 9% or 6% with an option exercisable for growth in the company in the future. So there's nothing wrong with if you manage big money, you have money. You can actually do dividends, you can do certain structure to make a profit in the long run. Come down to how much money you manage. I don't know if you them rich for ask. Everyone is up 100 mil. So
could be.
And so when you talk about we want to go back on meal packing now, the business them with meal pack now, are they subsidiaries? Are those related interests? That can cause
are the management them have interest in them over there?
Well, it's a conflict of interest, that brother. Because there's been a big cases. If you judiciary wise, if you look on business case precedents, you realize that there's whole legal thing happen, matters happen thing when you have related party transactions in a certain way, because somebody can be illegal. Yeah, man.
But for we understand the thing, we can look into it and know what going on. But the thing with Jamaica, which me not like, is a hush around here,
Yeah. Exactly. I have to be careful where I said to Kai.
Even people on YouTube, them come on and them are hush stuff.
Yeah. Because I'm afraid the weapon, because I'm afraid the weaponize against them. So again, you have to be careful.
Oh, careful. And when I watch the thing them for the Bloomberg, the man them just talk with them say, and the market just nice.
Well, two different kettle of fishes.
Why for the fish still? But yeah, we get what you say.
Even the stock exchange itself too. The standard what them set in terms of disclosure, whack. Too much information I do now. You ever look on the quarterlies them? No information in the quarterlies them.
barely. Man, them just all right, financials. All right.
I know, to be honest, one of the reasons why I am investing more in the US market now, because it's so easy to research companies, like
Exactly.
it's way more easier.
Information is out there.
And all right, much appreciated. I didn't even say about information out there. I'm going to make you guys know something. See, the financial institutions, they have to pay for certain information from Jamaica Stock Exchange. Remember, Jamaica Stock Exchange is a listed company as well. So that means that they need to make them money, they need to make for them growth, they need to make for them margins and them something there. So if you check on even JC now, the updated website, you only get like 2 years worth of information like on the home screen. And then you'll get the financials box. You know the summary of them that get them only get 2 years. Price history you only get 12 months if you don't sign up. And then there's other information where you literally have to pay for to get. So at the same time, is a conflict of interest to say, all right, we can go in for free, but we need to make revenue some way, shape, or form. So we're going to go into some and now pay for the extra. Because the average person now go want all of the information anyways, but the person actually who are going to need it, you can't get it unless they go pay for it.
Yeah, true.
I'm going to take our next question. Thanks for all the responses. Imran Borrell just asked, do you think Jamaica have any recession-proof stock? Recession-proof stock.
Yeah, man.
Well,
in terms of recession-proof business, I would say yes. But in terms of the market,
NCB now gone away. Even because NCB are mostly infrastructure. Grace Kennedy now them have them are rock stone, you know.
Yeah, those are business that you would say all forever type of business. All forever, because
and you're looking at the balance sheet as well.
Companies fail, unless the system fail. The system after if NCB fail, that would mean that the system fail, because NCB can control 30+ % of the whole entire market. So if an institution like that fail, there's big implications. So
and how much percentage NCB represent a very high percentage of Jamaica per GDP if you look at GDP structure and NCB market capitalization, it control a very huge proportion of the market cap of Jamaica. You understand what I say?
Yeah.
There'll be a systematic issue. But when it comes to understanding recession-proof stocks, you have to look at fortress balance sheet. You want balance sheet with a whole heap of cash, and we can cushion and withstand.
I think Wisynco is one company, because Wisynco is a company that are rich in cash. To me, that's a recession-proof stock. So I have to. So far, Grace, NCB, Wisynco, who is on your list? Which other company could say no? Sagicor. Sagicor is a what about Sagicor?
I mean, I know about Sagicor now.
But you make the distinction between a stock and company. I don't know how to change.
All right, I want to differentiate. All right. All right, I want to differentiate.
Distinction between the two.
So, all right. It's a recession-proof stock. So I don't think there's no recession-proof stock, but I think there are recession-proof businesses that's on the stock exchange. So that's how I would phrase the question, because some companies, if they fail, might as well.
You pack up and go home.
Yeah.
But is it? But I don't understand still why you have to differentiate, because stock is a fractional ownership in our business.
No, but remember, say the stock market is driven by speculation also.
And
market sentiment.
Yeah.
So if a recession should happen right now, you know that stocks can just plunge immediately.
You know the company still perform good.
And the company still is there and is in good operation. So there's a difference. So I don't think there's a recession.
NCB stock come from $200, $90 reach now.
I'm glad come on load up on it.
Yeah, some understand what you are saying, because you said the company is good, so keep buying it.
Yeah, but Mr. Market. Yeah, Mr. Market.
An opportunity. Yeah.
I knowing the dichotomy between a business and a stock price is one of the fundamental factors to invest in, you know? It's called Mr. Market or you want to call it. Eh?
And the only way you can see when opportunities come. So it makes a lot of sense.
So
But
I'm
if
gonna
you
tell
value,
you.
I think NCB have a P ratio of 7 point something. So from the PE, where you said the whole the way, it is a good company. Like one
Yeah,
of the low ends. I think the closest to it is what JMB, but maybe like 0.0 something lower than it. But overall, they are good companies. I guess maybe the market not necessarily focusing on the NCBs because them numbers big as price, and then because your big investors probably see it and go down, they might probably try offload and it just kind of just rip
oh
off.
man, right now I'm telling nobody this. You see, if you plan to invest for the next year and every month you get your pay for the next 8 to 10 months, just load up on NCB. Just don't watch other stuff. Just buy NCB.
All
Buy
right.
NCB.
We're not giving any financial advice.
That's advice, but
We're not giving any advice over here, but you know, we're not telling no one to buy NCB stock. We're not financial. Well, I don't know if Gart's a licensed
no,
financial
no,
advisor.
not yet.
But
Research analyst, bro.
these are just opinion.
Yeah, personal opinion. Buy NCB.
Yeah.
It make a lot of sense.
Yeah.
And the thing too, I like about the Jamaica market, you know. As I say, we always see a lot of programs out there. And no one now said, just like my God said a while ago, if you feel like you're buy NCB, why not say it? What you're afraid of? You get me? If you feel like you're sell NCB, why not say it? What you're afraid of?
But Lance supposed to put up say we discuss those opinions,
Exactly.
you know? Opinions.
It just set a way.
Yeah, so that's
all this talk.
yeah, once.
Say, yo, I love this, now buy this, and I buy it at that. Wow.
Yo, listen to me. If you find a bank that's selling eight times earning and return over 3% per asset, which NCB are the close. Return at the market cap of NCB there, and I'm return 3%, and then myself below 8 times earning, come on, and then I have more debt and more per cash on them book, and then my infrastructure.
Yeah.
NCB PE ratio as a right now is 7.03. As I say, the closest.
What's the return per what's the return per asset?
Give me a second. ROE. Definitely check. My return on asset is 20 or 21.85.
Okay.
Supposed to be equity.
That's 12 month trailing.
Eh?
That's 12 month trailing.
Return per asset.
Return on asset. Oh, I'm thinking it's a return on
equity.
Oh,
No equity, I look for another dog.
Equity, me look one card and me think, well, me have to pull up another
About
sheet.
3%, man, or 2.5%.
Yeah, somewhere there.
A good. My personal opinion. Can I tell everybody this personally? Ruan personal opinion, not Lance, not anybody's. My personal opinion.
Grand.
Just load up on NCB for the next 10 months. You know, I regret it. Trust me.
Man, I have knowledge, brother.
I think NCB return on assets had fallen during the pandemic, you know, significantly. But I see where long term it's a good company. And company like Ruan, not hearing your Ruan. Let me check. Not hearing your, you're saying something, Ruan?
No, I'm not saying that.
Oh. So it's a company good for the long term. I think it's a great company. If you look at the other banks like JMMB and Scotia, they're good companies, but I expect slower capital appreciation in the long term. And Scotia case, no, I think they're one of the most consistent dividend payers. But if it's capital appreciation, I don't think you're gonna find it there as much.
At what, NCB?
Scotia.
Oh.
It's a dividend. It's a more. Let's say it could be a dividend king if you had such a term for Jamaican market.
Word of caution, doing. I remember NCB hasn't paid dividend in what, like 2 years?
Yeah.
No, them not pay. Them not pay none. Are them pay 0.
No, NCB not paying dividends a good time now, man. But the thing is, you know,
It doesn't make sense to pay dividend when you acquire businesses.
Them must say, oh, I think,
you know, the reason why them not paying a dividend of a strength them capital adequacy ratio, you know.
Mm.
So it's almost like them are prepared for the weather in a sense. You get me? So here what? When we look at
alone,
So
none of them alone never they are paying dividend. Financial institutions, remember
Normally, Bank of Jamaica, they prohibit them from paying dividends. But even after that, NCB continues not paying any dividend.
Yeah.
You get me? But at the end of the day, all right, just as we talk about BOJ, tell them, say, yo, no paying no dividends. That was to ensure so them have adequate capital enough.
Just US dollar go overseas and them billions of dollars there.
So you said no, NCB now paying a dividend. I really the capital adequacy ratio. BOJ give them a capital adequacy ratio with them for all, like 10%, off whatever asset them have out there, if you understand how it works. JMMB, and this is the reason why I love JMMB. JMMB has been performing. JMMB has been performing like JMMB capital adequacy ratio 2 times what the bank tell them for all. So if the bank say all 10%, JMMB are 15, 16%, 20%.
Barita as well.
NCB, Barita is well capitalized.
Barita is well structured for a stamp.
NCB still, NCB them say all 10%, NCB are all 11%, madam. Right on the edge. And that's the reason why I love NCB, because they're aggressive. But you see now that the storm come, them kind of weather the storm, them start, you know what I mean?
Storm coming. Speaking of storm, so were you expecting a recession?
I mean, the US market is in a mild recession.
Yeah, US market.
Recession.
It's in a recession already, but it's a recession kind of different from the traditional recession where we know it. Because we always know, all right, so the economy operates in a, whatever they call it, a peak and a trough.
Yeah.
Yeah, so it go up there, so then it come back down. Normally, when it go up on top, you normally have like your labor. It's normally labor cost that triggers inflation, So when you're expanding, you start employ everybody you can expand. I mean, you can employ. And the more people you employ, the more wages have you pay out. And then the people who will get the wages now, them turn around and buy the goods them. So demand increase and that push up inflation. See? And then the central bank could have come now and kind of sort out that. But what we see happening is that inflation has increased. Central banks start increasing rate to sort out the inflation fire over there. So. Yeah. But you see the US market continues to employ more people. In July, them saw 500, almost 28,000 people employed.
Why? Why is that so though?
Yeah?
Why do you think that happened?
No, what may I say, the market don't really reach a peak yet. So it still have room for expand, even though GDP, I think.
Them start cut the job then no.
Yeah.
Yeah, a couple companies start cut, but overall net.
That's because of the monetary based expansion by the central bank caused them to have a lot of cash so they could hire. But
yeah. So what I'm saying now with the inflation is that we think, even though you see inflation will calm down away, I think the inflation, you will have some pressure from the wages.
You more have stagflation. So because of the interest rates hike and the prevailing and the prevailing inflationary pressure, you have a period of low technological advancement where the economy start deep because of a stagflation. So it's not gonna be a jerk like in 2008 or 2000 dot-com boom, because of the way how it has been is a long-term this cycle of heap on itself now. So you have a very slow down, and not America alone, globally. So you have high expense ratio for businesses, inflation cause wage, and that's a wage, and you just have a slow more growth. You have people become over the next 5 years, probably have more people unemployed than what we have now.
Mm-hmm. So, and I think other factors contribute to it. The other global crisis, things like the war, the energy price, and also the real estate market and those things. So we have a next question here. Someone asking Gart, where do you expect NCB to be next 5 years?
Ask me specifically where I expect
Gart, Lanarissa.
Yes, God.
I have not even looked at NCB to that. But if I was supposed to not advise, I think it might drop a bit more. Personally, I kind of hope say it drop just a little bit more to maybe around about 85
$80.
So around there, so and then we start buy, because if it continues based on that earnings, that means that P going also drop, which means there will be a shorter duration. If you know how P works, by the way,
Yeah, God,
yeah.
without break you. You tell me say you want HCB.
So,
You want
alright,
HCB.
you're not giving a direct answer then. Alright, and
Oh,
you don't have to give a direct answer. So, what I would say, I mean, you expect it to be a business that's still here in the next 5 years, right?
oh yeah, definitely. Of
All
course.
right. So we can just give us, we don't have to give a specific number or anything. So we can leave it at that.
Just buy NCB, man, if you like NCB.
So, anyone look at Elite Diagnostic?
Elite.
Elite.
Yeah, man, we do a valuation of elite and blue collar finance channel.
What you can give a summary what you think? Someone just asked about. Let me see where the question is.
Tell me the name of the person. Let me see if I one of my subscribers.
Ian Williams.
Ian.
Wait, let me see.
No.
Ian Williams.
Ian, you have to go over blue collar finance channel and subscribe. Elite video over there. But here the elite thing go. Since so elite, what do they call elite? What service elite offers? Diagnostic imaging. Seeing, so the problem we have with elite is that the machines that elite uses to do the imaging, whatever, the TC scan, the scanning and some name we can't ever pronounce. We have to see them to pronounce them. Those machines are very expensive, seeing, and them break down a lot. Seeing, so for elite to operate, elite has to continually purchase those machines. So those machines are very expensive. And that is what is taken away from the elite profit. So we see where the margins, and then to the people that man the machine are experts, and you have to pay them high wages for them services. So because of that now, when I look at expenses like administrative expenses plus the depreciation, that is about 50%, high 40s off the revenue what elite generate. So if them generate $10, them will pay about 50% or $5 for them expenses. And then profit, finance costs and taxes will come from the next $5. So elite have very thin margins. Problem that. You get me? So what we do is to look at the turnover. How well, or put it the next way. How much money each machine generate. That is what we look at. So in the Ligoni branch the other day, them put one TC scan machine up there, and that add to the revenue significantly. You can see the improvement. Each time the machine them break down, you can see the drop off in the revenue and the drop off in the profit. So the machine is what we have a problem with. You get me? But them have room to expand, like in other parishes. Them just there about 3 locations them have. Jamaica wide.
So
for them expanding other parishes, and in expanding, the business can grow from that perspective. But the growth will be limited due to the fact that these machines, them have to continually invest in these machines, and they are very expensive. So when we value elite about $3 little bit, we value elite. We say elite are trade somewhere thereabout. So we say elite fairly valued at this point. You get me? So,
All right.
yeah.
All right. So I had initially planned this live to be 1 hour, but we are going
content we are looking at land. So I'm tier one.
we're going closer to 2 hours.
For the people that watch, you have 30 people that watch lands.
Well, let me see. The next question, and then see the next question, and then we take 2 more. What are your views on Massey? Gart, have you looked at Massey?
No, I never looked at Massey personally. And isn't it a cross-listed stock?
Yeah, the cross-listed stock that was listed for.
It was listed.
The company. Pardon?
Personally, I'm not a fan of cross-listed stocks.
Why?
Well, based on even art. So if a company, I don't like cross-listed stock because one, the stock price barely moves from there because you can have persons in Jamaica buying or person in Jamaica selling, and then you have other persons buying. But most times is persons in one country holding and in another selling, or the buying and selling of it from the cross listing kind of not really make it move. There's this thing with Trinidad, especially when it's listed on Trinidad. You know, Trinidad have pegged the US dollar. So what would happen normally, and at least I know this with JMMB, is that when Trinidad will buy the stock in their TT dollars in Jamaica, they can sell it on the Jamaica Stock Exchange and get Jamaican dollars, which they can then convert into US dollars, which them can then use and do whatever. So one capital kind of leaves the US dollar leaves the country, and then it kind of hampers the stock price. And that was what happened. What was happening with GK before some turn event and it decided to pop off. And it's the same thing kind of technically happen with JMMB right now. And that is why you see them announce when them buy back shares, they click up for kind of lessen the amount available in circulation to some extent. Personally,
What is about NCB, which is a cross-listed company?
as me tell you, like from the company cross-listed for some reason, I don't know. I just feel like say it continuously just hampered. You don't really get much movement on them something there like the regular other stock. Cause even at the mids, NCBC just kind of gradually go down. I'm sure persons who have a lot in it kind of worried. And it's the same thing with
sorry, you think that the cross listing affect NCB currently?
No, but personally, I'm not sure about NCB. I know about.
But you know it is affecting JMMB.
Yeah, it of course affects JMMB. And that is why them put out the news them buy it, but they've been buying it before then. So there's that. They've been buying but them stock little for kind of reduce the whole circulation. Cause they know it, but it's kind of under the hush hush. So there's that.
Personally, I haven't looked at Massey since it was cross-listed, but what I noticed was that it was a stock that wasn't so as liquid, because recently when they cross-listed, I realized that Jamaican investors have a thing about price. They look at the price, but the business itself, it's a solid business, but I couldn't give a say on the valuation at the current point. At this current point in time. This is something that I could explore in the future directly.
Yeah, one of them blue chip company there. One of them blue chip company will have them on in a lot of markets, no?
Yeah, man. They sell gas and
them a very good run company.
Yeah, man. If you can get that company at a good price, I buy and hold for the long term.
Them heavy in a gas, them heavy in a even the oxygen and anything that flow through the pipe or whatever, so that medical supplies, them heavy in insurance, reinsurance services, them heavy in remittance, that very good conglomerate.
It's like a GK. It's
like
a GK point two.
Yeah, and the leader who run it, John, I think his name John Locke, he's one of the chairman also. He was a very good businessman. Historically, he run Guardian.
And that's why even them did stick as long as they say the stock price Jamaica really fuzzy about stock price, and that's why them did even do the stock split, because it was at remember for 2000 or something like that, and then them split it down to 1 to 20 or 1 to 1, something like that, so make it get more accessible to the regular person. Because even though at $2,000, even I see it as $2,000, I must say, yo, that's too expensive for that.
True.
So honestly, I saw like when he legit just started invest, I never did go buy a Grace. And then at that time, when I started invest, JMB had this thing where you only can buy 100 units. So basically, if I have 10 grand, I can buy Grace. If I have $100,000, I can buy a Palisade. So that was kind of like a barrier to entry for like certain persons. I mean, that psychology is spiral.
I think it's a psychology that that we'll have to do more as YouTubers to try to educate the public. So I'm going to do a video on it with the price, but it's just a thing that I noticed with the Jamaican market. But as investors get more knowledge, these things they'll become more aware that the price is not really the price. If I see a stock with a stock for $2,000, that doesn't mean that it cannot be undervalued. So it's something that new investors have to try to understand the difference between the value and price.
True.
I think Jamaica is a good training ground, Tony. So if you're a fundamental investor, you want to hold stocks for the long run, a really good place for investor.
See.
So I'm gonna take one more question, and that is it for tonight. We might have to do another live, and next time I don't want to go over 2 hours.
Lance, what you need?
No, I'm not gonna go 2 hours.
Get the Lance. No, man, Cole. But as I say, you see the something here?
Yeah.
You need to make it a part of your program where this is what we do.
Yeah.
You don't think it's successful?
Yeah, definitely.
So why? We just come on and talk every now and then.
Yeah, every 2 months or so we can do every 2 months we can do a link up and we can do more live.
It makes sense.
So definitely I have to give thanks to all the persons that turn out to view our live, and I hope you have learned something. So I'm gonna take the last question, and then that is it basically for now. We're gonna let's see that transgenic. So the only other question I see is that about Carreras. Let's say I invest 5 million in a dividend stock like Carreras, then use my dividend of 10% of 450,000 to buy growth stock. I'm not understanding that the way they do the question.
Sim can go on it because needed come off right guys. What's what saying? Which question?
The sentence structure. I want to look at another question. If that person can retype the question, that would be good. But I want to look at the next question. So all right, the last question I want to say is that person comment that Jamaican stock market perform better than US stock market. So you guys overall, you think that if you want you can just give us short answer. You think that if you want more opportunities, one should look more at the junior market over the main market? What is your opinion on this matter?
I think,
Sorry,
go
ahead.
At the end of the day, you search value, anywhere value there. You pick up whatever value you can get. At times, the main market companies that might sell at discounted price. We don't want left at discounted price simply because it's on the main market as against the junior market. So anyway, you can find value, just go for value. I mean, junior market companies are normally smaller companies and are expected to grow. I mean, with smaller companies, future growth seems larger, bigger, but at the end of the day, we see where a lot of main market companies double and triple and grow at faster pace than market companies. So I think I just search the values and just get the value wherever you can pick it up. Main or junior, it doesn't even matter.
No one main company that they are just under the radar was SOS. Like, we don't know when SOS.
It's a junior, you know.
Oh, is a junior? Yeah,
junior.
One of them good company, yes.
They call it under the radar. Blue collar finance beat that from day one.
Like, you don't hear much about it now, like the main news and them things.
No, because at the end of the day, you can't watch it. You can't watch the main thing. The main thing have them own objective, you know.
Oh, yeah.
You have to be very careful with it, you know.
I'm gonna tell you something too. You see if you can. When I say yo, if you're only specifically talking about Jamaica, but one of the reason why most people when them ask me about investment, I always say yo, invest. If you can invest outside Jamaica, you have to look also on hedging the dollar. And it has done a wonder for me. You see me? As Lance might know, I'm mostly overseas maybe events. I'm who am a purchasing power. When most people there are investing on me, my return might be off a few basis points, but my purchasing power did it. So yeah, just can't hold the horizon to Jamaica alone. If you have the opportunity, look outside too.
Okay, Lance, so the person what is Chipmunk Finance, I think them calculation just did slightly off. So basically what they're saying, if they invest $5 million into Carriers, which is a dividend paying stock, then use the 10% what they might get as dividend to reinvest back into growth capital so they don't lose their principal. I think the reason why they put 450 was because maybe they had to go to 50%, but 15% would be 75K. So it'd more likely be $425,000 for investing in a growth stock for maintaining capital appreciation. So that basically asks. So
Okay. Oh. Well, I mean, if I'm investing in growth stocks, I wouldn't look to reinvest from dividend to go. I'm just going straight growth or straight dividend. That's what I would do. So I don't know, what would you in that case?
Me?
Yeah.
Oh, well, as I right now, as I did say, my dividend stock, them never work more than the people them they are sent. So it never make much sense. But as time grow on, I use that dividend to reinvest back in the same company, which is Carriers. So I don't necessarily know about the growth part of it. But the idea that the person has seen that in some sense they want to just maintain their principal is a relatively good idea. So 1 year at least I expect a certain kind of cash flow, and seeing the Carriers pay quarterly, that basically have 4 chances to buy into the market or buy into the growth stock each year. So it's a relatively good strategy. But my dividend is dividend reinvested back into the company. But this person dividend, they want to use it and buy other companies. So it's a good idea. I guess you're getting back the cash flow and still maintaining your capital is a good way to go about it.
Yeah. Good passive income if I want to invest in other companies. Yeah.
Capital gain over dividends anytime.
But not my strategy, but it's a strategy.
Still.
Yeah, nonetheless. So I wanna any closing remarks or anyone? Ruan.
Yeah, I'm glad some there for a reason with the mans, them and the people and
All right. So thanks to all the guys that coming, Ruan, Blue Collar, Guard. Thanks for passing through. Shout out to everyone who has been viewing our live. It's been a pleasure to help you to understand the market as we discuss and learn ourselves. Because there's some things that I'm here and I'm hearing for the first time. So that's the thing when you talk with other investors, you learn from each other. So in the future, that's one thing with networking. So I want everyone to stay safe and look forward to our next live sometime in the nearby future.
Sooner than them expect, lads. Say that.
Yeah, that's a good vibe, man.
Yeah, we love it, no?
Yeah. And also, before I go, one more thing. So you can check out Grant and Blue Collar. If the first time you're on my channel, subscribe and share the videos and like.
God have a channel too.
Yeah, God have a channel.
The Blue Collar already, because Blue Collar, I'm going to know everything one of my thing.
Yeah,
Blue Collar
Blue
finance,
Collar
yeah.
cover the local market very good. I like that. I like how we cover the local.
The man I put on the background and what? You see Blue Fire, you can't miss it.
Yeah.
On my channel, I have somebody in the comments just to say what they want to know about different companies and how they make money and them something here. So we kind of have that project there I work on. So
I love it, you know. I love it. I see you do the PBS and it bad.
May I try, yo, trust me, man. Next week, may I get a camera, so the videos are more consistent. Me is a Samsung man, iPhone a 5 me. So yeah, but it's a vibe. Just have a few companies coming out. One interesting is the lab
Yeah.
and trans as well. I also have JMMB, but I kind of hold up on JMMB because when I approach JMMB, I approach JMMB decent guys. Yo, if any JMMB ambassador there, ready to be a brand ambassador. So I approach it proper. You see me? But the rest of them, I have like about 14 companies already. But rest of, you know, my editing style, you know, do it different than just come and talk. So
It's a good look.
All right. So gonna left your guide. I'm gonna left your guide channel in the description. So
Yeah, makes
persons
sense.
will be able to find your channel. So that's it. We're out for today. So take care, guys.
everyone, my G, all right, yo, late.
Yeah.
Yeah.